It was a wild day of peaks and valleys on Wall Street today, not so much in the crypto market, but mostly in traditional markets as the Fed came out with their decision of 75 basis point rate hike, and the minutes or notes came out that the market initially interpreted as dovish and a potential signaling of slowing. And then at the end of the day, when Powell came out and spoke, he basically did the smackdown. I guess somebody texted him and said, "Hey, markets are up. They think you're pausing." And he came out and said, "We still have some ways to go. And incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected." That's what killed the rally and brought everything back down to earth and then some. We have a ways to go, he said. So he basically said, we are nowhere near where we want to be. Rates are going to go higher than we thought. We know that inflation is a problem. So as long as the job market remains strong, as long as GDP remains strong and the markets are up and companies' earnings are solid, they're going to keep on going. They're not going to indicate any kind of talk of pivot or slowing or anything like that. Of course, he said data dependent, all of those other things. And this was the note here hinting at policy change. In the future, the committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. So these statements are what the market's reacting to. We still have some ways to go on the incoming data. He said, so that time is coming, and it may, so still Powell repeated the idea that there may come a time to slow the pace of rate increases. This is what the market rallied on. He said, so that time is coming, and it may come as soon as the next meeting or the one after that. No decision has been made. So that's kind of what the market was rallying on initially. And then he basically reiterated, but we're going to go higher than everybody thought. We're going to stay there longer, and slowing down doesn't mean stopping. He also expressed some pessimism about the future. He noted that he now expects the terminal rate, or the point when the Fed stops raising rates, to be higher than it was at the September meeting. With higher rates also comes the prospect that the Fed will not be able to achieve the soft landing. So he's basically saying, like he said at Jackson Hole, and like he said at the last meeting, that there is going to be pain. So the Dow reacted down 1.5% with a 1,000-point swing day, finishing on the lows. S&P down 2.5%, NASDAQ down 3.36%, taking the biggest hit. Let's jump into the charts real quick. Here's Bitcoin. Bitcoin kind of ho-hum when you look at it this way, but when you look at the hourly, there's your Fed, there's your Fed softening hopes. And then it realizes, wait a minute, what did he say? And then it comes up and down, and here we are finishing on the low. So the hourly is quite fun when you look at how the price action of Bitcoin, Ethereum, most of the major alts reacted. Let's look at Doge. Lots of liquidations going on in Doge here, kind of coming back down to earth a little bit. Let's take a look at it on the daily. Doge had a nice little pop. Now it's kind of unwinding that move as, this little manipulated spike here with the shorts and the longs are getting wiped out. But when you back up and you look at Bitcoin on the daily, kind of still in this range, it's kind of at a target level here. If it breaks this support and breaks that 20,000 level, it's going to run back down, test these lows here, and then ultimately retest that 17.5 level. So Bitcoin can hang on a range sideways here for quite a while. A lot of people are wanting resolution to this and expecting an explosion upwards or downwards. It doesn't have to do anything. It can just trek along like this for a while and wait for some major event in the markets before it ultimately drops. That would be, max pain would be popping up a little bit more and dropping, or even just holding right here, just wearing people out. Making people think that it's going to make a big move one way or the other and just continue on a liquidation path like it's been doing. A little bit of liquidation of the shorts, a little bit of liquidation of the longs, just kind of working these little volatile price action movement here. Let's take a look with the moving averages, and rejecting off that 100-day moving average as it has done in this downward trend. Once it lost the 50, 100 became the rejection level, lost the 200. That became rejection. So now it's rejecting on the 100, which isn't good. The price really needs to get above that 100 to have a chance to move upwards. As you can see right back in here, last year at the bottom of February 2019, in the 2018-2019 bull and bear market for Bitcoin, that last breakthrough and finding support on the 100-day moving average is what indicated the potential for a reversal. And as you can see right here, lost, rejected on that 100 right here before the ultimate final leg down. And, markets aren't in turmoil yet, but still rejecting off that 100-day as it works its way down to lower levels. So we still have, as we follow this along, what you're looking at is of the trend, lower high, lower high, lower high, lower high. What we haven't put in yet is a lower low. So we have our low here, and we haven't really put in much of a lower low, maybe potentially right here on a closing basis, just barely slightly below that area. If you draw it in here real close, let's remove all these drawings here. And let's see, this area here, closing 18.3, a little bit lower. So just a hair lower than back here in that June low closing. So what we're looking for now would be to continue a downtrend, a lower low breaking this level here that was put in earlier in, late September right there a few days ago. So that's where Bitcoin and what Bitcoin is working on. And here is the Dow Jones. Briefly found a little bit of support above the 200-day and then lost that today, working its way back down to the 100. And again, the 200, same thing we saw here, had a big drop after that. Back in the first time it rejected off the 200 was back in April. And from that point, ultimately dropped 15%, lost it back here in August. Let's see what that looked like. From the time it rejected, dropped another 15%. So question of the day is, what does that do here if it drops 15%, putting in a lower low around, look where that would be. That would be around 27.6, somewhere in that neighborhood if it lost another 15%. Let's look at the NASDAQ. NASDAQ right now below 50 and 100, which is not good. Broke below both of those. Lost the 100 here, dropped. When it lost the 100, it dropped. Let's look at that, 28%. Found a little support here, lost it right there, dropped. Let's see what that was. That was a move of about 15%. So didn't quite make it to the 100-day moving average here, but let's just look at, 15% drop from here, puts the NASDAQ around 9,900. Now let's look at the S&P, same story. Losing the 200 here, losing the 200 here, hasn't made it back yet, but losing the 100. So let's look at the last time it lost the 100, moved down about 11.5%, so not quite as bad. So let's take a look at where that puts the S&P, and I think there's a lot of technical confluence for this right here. Yeah, back down to that 3,400 range is kind of what we're targeting in the S&P. So that would be a new low. Again, downtrend, lower high, lower high, lower high, lower low, lower low. So that's what we're looking for now. Let's get on the weekly, and the S&P still finding support right now on the 200 weekly, lost the 200 weekly on the NASDAQ, and still have support on the 200 weekly, but losing the 50 and the 100 there. Obviously didn't make it back on the NASDAQ or S&P. So let's take a look at the VIX real quick and check in. And ultimately, like we were talking about in the last video, when the VIX is high, it's time to buy. When the VIX is low, look out below. And basically the VIX trading in that 20 to 25 range is danger territory. And then when it gets up into the 30s and 40s, that's, when you can look for some buying opportunities in a standard, market situation without any major events happening. Obviously, the Fed tightening the 75 basis points was built in. A lot of people were looking for messaging from the Fed that softening was coming, as maybe as early as the end of this year. So the reason the markets were down was because the Fed said not this year. Dollar working its way back up. 10-year working its way back up. So we'll have to see if these trends continue. Most likely, we might see a nice little buy the dip in the morning, potentially off of these lows, and then continuation to the downside to kind of price in and unwind what the Fed just said, and then continue to work as the Dow shows us, drop to these lows, nice little rally, drop to the lows, nice little rally, drop to the lows, nice little rally, drop to new lows, nice little rally. And you can see the Dow has been generating some nice big rallies. The NASDAQ lost a little steam on this rally. S&P lost a little steam on this rally, but the Dow became the rotational safety trade of the last rally. Bitcoin just kind of plugging along, doing its own thing, holding support right here. And, if it continues to hold support, then, this will be the macro bottom area here. But I'm still watching this closely because it looks a lot like this area right here, just waiting for that last little pin to drop, straw to break the camel's back to go down and find the ultimate low of this cycle. I just don't feel like this is it right here. There's still too many people that haven't been liquidated yet, too much leverage out there still. Miners are just now starting to really feel the heat and the pressure. Leveraged players like a MicroStrategy and other investors haven't felt enough heat, enough pressure. This is wearing them out a little bit. But if price drops back down and starts hitting that 15,000 to 16,000 level, that will put the pressure on, and then you'll start to see some real action there. So, but this could continue to grind on for a while until something else happens in the markets. Catalyst, some other major catalyst in the markets. Tomorrow, maybe we'll update on the housing market. Interest rates are continuing to climb. A lot of noise going on in the housing market, but that's a very stubborn, sticky asset price. Doesn't adjust as quick as markets do. So these are the things I'm looking at. I'll see you in the next video.